and gentlemen, good day and welcome to Q1 FY26 conference call of Kamat Hotels India Limited. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star followed by 0 on your touchtone phone. Please note that this conference is being recorded. At this time, I would like to hand over the conference to Ms. Nupur Jain Kunia from Valroom Advisors. Thank you and over to you, ma'am.
Thank you. Good evening, everyone, and a very warm welcome to you all. My name is Nupur Jain Kunia from Valroom Advisors. We represent the investor relations of Kamat Hotels India Limited. On behalf of the company and Valroom Advisors, I would like to thank you all for participating in the company's earnings conference call for the first quarter of financial year 2026. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. The statements are based on management's belief as well as assumptions made by and the information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Vishal Vittal Kamat, Executive Director, Ms. Smita Nanda, Chief Financial Officer of the company, and Mr. Nikhil Singh, Company Secretary and Compliance Officer. Without any further delay, I request Mr. Vishal Vittal Kamat to start with his opening remarks. Thank you and over to you, sir.
Thank you very much. Namaskar, everyone. Thank you for being on our call for the first quarter of this year. While the overall financials are nice, they could have been much better because unfortunately, and it is our duty, national duty, to support our government and our nation, and that's basically what has affected us in the first 15-20 days of the month of May, and in some cases it has affected even more, like in the case of Chandigarh and Himachal, Shimla, Manali. But that said, still the team has done very well. We have seen an improvement in our overall ARR and other aspects because many of the better properties also are now in opening. We have good news that we will be opening the Orchid Rishikesh this month. And along with that, we were happy to inform that we signed another hotel next door. So we will be basically having 2 hotels there, but they are next to each other, because of which the overall inventory will be 100 plus. Right now, in fact, the owners are so happy that they may make even more rooms, because we wanted that Rishikesh is a premium wedding destination. So based on that, that will be opening. We have a lot of additional hotels opening also, which are your Dwarka. We have opening, which is in the month of September, along with Bhavnagar. And then we have various others. We signed the Nashik Hotel, which should open in the month of April, the Orchid Nashik, Panchgani Orchid Hotel, Panchgani, we signed a day before, which will be opening in the month of September. In fact, 15th September, it will open. So as we can see that the coming time is also very buoyant, where currently we are operating around 17 hotels by this year ending. 19 hotels. Thank you, Nikhilji, for correcting me. 19 hotels. We will be going to approximately running, not signed up, but running hotels around 25. So that is basically it, and the company is very buoyant and sure that we are aiming to open 30 hotels by this year, which are qualitative, which are adding to value to Kamat Hotels, adding value to Orchid brand and Era brand. So we're very selective in what we've been taking as we've been, and that's why our numbers show that, our efforts show that. So we will have 30 good hotels operational this year, apart from, in addition to all the other hotels which are in pipeline. So that's a very good thing that I can see over here. Apart from that, to take the financial figures, we have Smita Nanda ji also, who's there with me. So Smita ji, if you can just touch upon the performance and the highlights, that would be very nice. Thank you.
everyone. Let me briefly touch upon the key performance highlights for the quarter ended 30th June 2025. The consolidated revenue for Q1 FY26 stood at 83 crores, representing a growth of approximately 12% on year-on-year basis. EBITDA for the quarter was 18 crores, a growth around 37% year-on-year basis, with an EBITDA margin 21.91%. The profit after tax stood at 4 crores, showing a significant increase in 291% year-on-year basis. With this, I conclude my remarks and request the moderator to open the floor for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aman Soni from Invest Analytics Advisory LLP. Please go ahead.
Hello. Good evening, sir.
Hello.
Hello.
Namaskar.
Namaste, sir. And my question is regarding to your growth. You have reported an EM growth of around 12% this quarter, and our full year revenue target is around 10%. While other major companies, even if I take companies which are not so big in this size in the hotel industry, are working at much higher rate. And I am not able to understand why our hotels cannot grow faster. Could you please elaborate on the reasons for your relative slower growth as compared to other players?
Sir, I'm sorry, I was not able to fully get your question, but to answer you why we are not growing as fast as other chains, basically, sir, primarily is because whatever properties we take, we are very particular in the type of property that we're taking in the terms of our main model of growth, which is basically revenue share or lease, and in some cases, management. Okay, we want basically not just numbers, but we want qualitative numbers. Whichever of our hotels today, wherever they are operating, they are all operating in the top 5, top 10 of their markets of their categories. Whether it is Shimla, whether it is Manali, whether it is wherever we are doing. So we want to basically expand in a qualitative manner and qualitative nature. Okay, is basically the major thing. The happy news is that from around right now we are at around 1850 rooms, 1825 rooms. From this, basically, we are this year going to grow to almost 2,500 operational rooms. That is the kind of growth that we have within this year, and that is the growth at which basically where we are again growing asset light. While we are growing, we are also repaying our debts. As promised, we are already a net zero company in that regard. So this was our promise to ourselves and our investors and shareholders that we will become net zero, and we have achieved that before our deadline target. So this, on that lines, whatever we have committed, we have been growing and we have been doing. Thank you. Yeah. Okay. Next, madam.
Thank you.
Thank you, sir.
Thank you. Before we take the next question, we would like to remind participants, you may press star and one to ask a question. The next question is from the line of Amish Kanani from Knowise Investments Management. Please go ahead.
Yeah. Hi, sir. Congrats on a relatively good set of numbers. Sir, I just wanted to know whether our expansion plan, have we added a few more properties during the quarter and hence relatively more number of operational rooms and hotels? Is that the impression that I'm getting? So if you can just update us on what are the change in plans, if at all. That's one. Second, sir, in terms of performance, there's a very good improvement in Era and Lotus on a YOY basis, but there's some softness in Orchid and Fort Jadavgarh. So if you can give us some trends of why this is happening. Third, sir, the last question from my side would be, the observation is that we have mostly now the new properties with, about 50 rooms or 70 rooms kind of property. So is this the right size of properties that we can, optimally manage with a decent margin, or how should we look at? Thanks.
The last question was an excellent question. I'll first address the ERA and Orchid, as you said rightly. See, what has happened is that in ERA brand, wherever we have our properties, there they are doing better and better. And the ERA base is smaller. So when I say base is smaller, means the number of rooms. So the performance to show is much easier, because also the largest ERA is ERA Mumbai, which is a 197-room hotel. So that kind of lifts the rest, which are having relatively small 32 rooms, 33 rooms, or 110 rooms. And by the way, then our ERA contribution is the ERA Bhubaneswar, ERA, various of the ERAs did a very good contribution in the overall lifting of the, when we say brand-wise, the segment. Now, more Orchids have come, and many of these Orchids are new, because of which they take time to stabilize. So, because of which the overall Orchid average is, as you would have rightly pointed out, low. But if we look at on a case-to-case basis on a standalone, be it Orchid Mumbai or Orchid Pune, then they are doing much better in that regards on their own. But this is a brand-wise, we have done a basket breakup, which is why your question is valid, that the base. So now see which Orchid Panchgani coming in, Orchid, various other Orchids opening up. Then what will happen, like Rishikesh and Panchgani, both are coming at a similar time. So what will happen is they will tend to bring the average down in the short run, but in the long run they will contribute greatly, because they are high ADR, good occupancy, good revenue, very good revenue markets. So season will come for Rishikesh, where we are targeting around 15,000 to 20,000 ARR, fluctuating between the seasons and others. So again, that will help the ARR go up. So your point is very valid on that front. On the second, on the last question which you mentioned, particularly, that question is a very, very valid and very correct thing. We actually tend to want larger inventory, because we have expertise in running 100 plus. There are very few hotel brands in the country which can claim operation skills of large hotels of 300 plus. We have two. We have one which is Orchid Mumbai, which is 372 rooms, and we have the Orchid Pune, which is 410 rooms, and both doing exceedingly well. So very few operators are there who can play, because it's a different kind of game altogether. When you are in the 0 to 70 rooms, it's a different style of operation. When you are in the 100 or to 200, it's a different style of operation. And 200 plus, or rather I would say around 250 plus, that's a totally different ball game altogether. So that is why, the market mix of your kind of halls you require, banqueting space you require, the infrastructure you require for a large hotel, like what is our convention hotel in Pune Orchid. We are adding 2 more banquet halls over there of, 7,000 and 5,000 square feet. We are adding public area spaces. The renovation which is going on over there from internal accruals only we are doing. So, so that kind of bulk, once it comes in, the hotel will do even better. So that's a right kind of mix which we have added. We have increased the number of halls also, and we've made them larger also, because that's what a 410 room hotel needs. So, this question of yours, can we successfully do it? Definitely we can do it where the ADR supports, where the revenue supports. But if the revenue is low, that's why we don't take a lot of hotels. To be very candid, out of 10 hotels that come, we probably select one, because many of them don't fit exactly what you said. If I'm not going to make money for my hard work, I don't want to do it. I don't want to have 5,000 rooms and have revenue worth 2,000. I'd rather have 2,000 rooms and have revenue worth 2,500. So, that's basically how we've been approaching it. That's why our previous caller also, when he asked a very valid question, that if others are growing in leaps and bounds, then why are you growing at a steady pace? That's because I want my growth to be robust, and I want that tomorrow if something happens, I will not be caught on the wrong foot again. And secondly, if you look at it, there are companies on paper who are double our size in terms of number of hotels or number of rooms. But in terms of operating performance, in terms of EBITDA, in terms of other things, we are far superior. Why? Because like I said, we'd like to make sure that our guest gets a qualitative experience and then our revenues and our EBITDAs match in that. So it's not just about this, but we'd like to definitely go for larger hotels. And as we get more larger hotels, they will definitely add a different dimension to our results and our operations. Thank you.
Sure, sir. And so one quick other follow-up on the EBITDA margin front, sir. This quarter, we have a good YOY growth. I was worried, given the pace of expansion, in September, October, November, new properties, they may take time to stabilize and, build the brand in that area. Should we worry about the overall annual EBITDA margin, which is more in the range of 29.5% last 2 years? Should we worry that we may or may not be able to repeat that because of the new hotels, or should we are we looking at EBITDA margins more in the range of last year, sir?
See, your brand Orchid, Era, Kamat is already an established name, so it does not require much time to get to know or get known in the market in that regard. What actually takes time is basically to build up the business on the books. So once we open, like we opened in Sambhaji Nagar, we opened in an area where nobody thought, they thought what is Kamat doing and why have they taken the Era at that location. But today that location is become the one of the best because of the efforts of the team, the excellent food, excellent thing. So brand issue is not there. What is that rightly put by you, that it takes time to build up your books, taking weddings. Once you open, then people will come for a wedding, then people will come for a conference. So your FIT, which comes through your OTAs, which is your Make My Trip or Agoda, or through our Orchid Reward loyalty program, which is also very popular. So that all is basically the additional. So that all comes quickly, but the other larger events all takes time. So like example, Rishikesh. Yes, initially we will have a EBITDA burn in Rishikesh on a standalone basis. But once the business starts pouring in, like we already have some queries of weddings which we have, we are closing in December and November, then at that time this will get wiped out or this will get covered. So definitely, the margins will more or less remain the same because we have now a very good mix of old stable, new coming in and growing. So definitely the margins will be, if not stable, if not down, it won't be. But if not growth, at least it will be stable.
Sure, sir. And that's very happy and all the best. Thank you.
Thank you, sir. Thank you. Namaskar.
Thank you. A gentle reminder, participants, to ask a question, please press star and 1 on your touchtone phone. The next question is from the line of Shaurya Punyani from Arjav Partners. Please go ahead.
Hi, am I audible?
Yes, please go ahead.
So what has been our occupancy and ARR this quarter?
It's there in our presentation, but let me just, for your overall, then we have basically had ARR of around 6,300 for Orchid. We have around 5,400 for Era. We have 5,500 for our Lotus. We have 8,000 for our Fort Jadavgarh.
Okay. And on a blended basis, we have targeted around 7,500, right, for this year?
We have targeted, definitely. So now what happens is that first Q1, Q2, the ARRs would be a little lower and the occupancy will be more voluminous. And in Q3, Q4, that's when the ARR and occupancy, because the best quarter is the third quarter and the fourth quarter is the second best quarter, and then you have the first 2 quarters. So on a target of on a blended basis with our other premium products now coming, we hope to target the 7.5 mark.
So, with the new properties coming up this year, can we expect a good, can we touch 500 crores in FY27? Top line?
In this year?
No,
next
in
year.
FY27. Yeah.
Yes, we should. If our pace continues at what we are doing and considering the kind of qualitative hotels we are adding, it is very much possible for us to hit 500 crores next year.
Okay, sir. Thank you. Thank you so much.
Thank you.
Thank you. The next question is from the line of Neeraj Mansinka from White Pine Investment Management. Please go ahead.
Thank you, Vishal. I think Congress was signing again 2-3 properties. Can you give one example of, say, Rishikesh property where you have signed 54 and 44 rooms? How can an EBITDA, the cash flow grow to you over the next 2 years or 3 years? Just a broad understanding would be useful.
Namaskar, Neeraj. You want exactly what? I didn't. You want basically me to tell you what it will do as a revenue?
No. So because you have a revenue share, I just wanted to understand how much cash will come to Kamat Hotel for this hotel, maybe 2 years down the line when the entire 98 rooms are operational. Just an hypothetical number as an understanding would be useful.
So, exact number I would not know right now, but I can tell you in terms of a percentage that let's assume that if the hotel does at 100% revenue, the thumb rule is 40% GOP. Okay.
Right.
So the company then 40 to 45 or 35 to 45% GOP. Okay. Actually, let's put it as a range that generally a hotel does 35 to 45% GOP depending on the various things. So the company, Kamat Hotels, whatever may be the revenue, will get comfortably anywhere between 12 to 18% back, apart from the rev share.
Okay, so you get
or maybe even 20% also. From 12 to 20%, 12 to 20% back, apart from the rev share. Net what Kamat Hotels get. It could get anywhere between 12 to 20%.
Okay, of the total revenues that the property will accrue, right?
Of the total revenue.
Okay. And what will be the approximate range of rate there, the ARR for that Rishikesh range?
So we expect to, we obviously started off with introductory prices, starting from the range of 12,500 to 17,500 in the different seasons. But we're targeting that we should do an average of 15,000 rupees is our expectation.
Wow, that's very nice actually, because it's a good ARR for you. It's a good upgrade actually. Yeah.
Actually, honestly speaking, Neeraj, honestly speaking, that is my very conservative target to my team is more because Rishikesh is a very booming market. It has great potential, and our property also Rishi 1. Orchid Rishi 1 is right in the middle of the forest, just off the main road. So it is a very prime location, and the new train tunnel is coming just the station. So basically, the station, the train which will go from Rishikesh towards the Badrinath and all those places, that new tunnel is there. That should open in the next 2 years. So that is very near, only a kilometer odd from our hotel. So that time it should do even better because coming to our hotel will be even more easy. And that's, I think, a kilometer and a half is a station called as BRC. So this will be a real game changer for the whole state and even for all because you will have all kinds of yatris and dham, getting more accessible. So this is a very conservative ARR we are looking from our team. I think we should achieve, if not exceed that, so definitely. Because that Rishikesh is that kind of beautiful place and beautiful market.
Right. So would you also have a higher F&B in this property considering you're targeting the marriage functions?
Yeah, during marriage functions and all, definitely we expect a higher F&B because the demand from a wedding is much more as compared to a normal FIT. But there will be all kinds of plans, which we call AP plans, means all-inclusive plans, MAP plans, which is breakfast and dinner or breakfast and lunch. So we will have all kinds of plans options also, even for our regular guests. So that could be a interesting thing for us in terms of F&B mix also.
Okay. And just wanted a broad guidance from you on FY26 and 27 on the revenue and EBITDA range.
on the overall?
Yeah.
Okay. So we should basically be definitely looking at 400 CR this year. Okay, that is definitely what we have. Considering Sindoor, considering other things, we definitely have 400 CR as our this thing, and our margin should remain in the same range that we are in right now. We'll obviously try to beat them, but broadly, this is the thing.
Same range means 30% last year, 29%.
Yeah, 29, 30%.
Okay, great. Okay, great. Thank you very much, and I'll come back as needed.
Thank you, sir. Thank you.
Goodbye.
Thank you. A reminder to participants, if you wish to ask a question, you may press star and 1 on your touchtone phone. The next question is from the line of Gurvinder Juneja from Fortuna PMS. Please go ahead.
Thank you, sir, for taking my call and my question. 2 questions. One is, wanted a quick sense from you. You've updated on the plans for Rishikesh and Dehradun. Also wanted a quick update from you on where the Hyderabad, Bhavnagar, Gwalior and Puri new properties, what's the timeline looking like to you? And the second is a question to Smita ji about the interest entry on the P&L. Just wanted to understand, the debt is now close to 100 crores, so wanted to get a sense of the interest cost that is showing up in Q1.
So interest cost is coming nearly 1.6.
Our debt is right now sitting at 95 CR, just for your knowledge. Okay. Kitna?
Okay.
98. Sorry. 98 CR.
Right. Coming nearly 2.86 crores.
2.86 crores. Right. And this is currently at 10%, which the company intends to bring this to 9% or below that in the coming time.
Right. Okay, sir. And your updates on some of the other properties that are on the table, the likely timelines to open?
Yes, that we have shared in our PPT, which is basically what we are sticking to. That Bhavnagar and Dwarka will open by September. The Orchid Panchgani will open by September. The Era by Orchid at High Tech City, Hyderabad, that's the 60-room hotel that should open by. Actually, we can open it by August. I've been told that by 15th August we can open it, but still we'd like to make sure that certain things are done. But we might expect that we open by September, but we might open it by 3rd week August. We don't want to lose any days because Hyderabad is a booming market. Same way, the other also Rishikesh, like I mentioned, will be opening by August. So August 3rd week, August end. So these are all what we have already in the pipeline. You want to know about also what we signed like Nashik and all, which I've also mentioned before. That's in April. We're looking at Dehradun, Orchid Dehradun. We are targeting to open by December. Gwalior also, the Orchid Gwalior, we intend to open it by December. So this year we should be comfortably with 24 to 25 operational Eras and Orchids in our kitty. But that is our current in pipeline, rather than our current thing. But we are confident that we might touch we will touch the 30 hotel mark by this year. And if opportunities come even further than that, then we will take up. But as of now, 30 hotels is our March, our target to open. In an open. Okay. Not size may be more, which may, like example, I'm not counting in this the Rishikesh, the Orchid Rishikesh, the second unit, which is right now 44 rooms, but may go up to 60. So I'm not counting those hotels. I'm counting only what will open for this financial year, so that next financial year we'll get its full value. And as asked by a previous participant, we can hit 500, if not, actually not hit, exceed 500. So that's our endeavor.
Right. Okay, sir. Thank you very much. Point noted.
Thank you.
All the best, sir.
Thank you, sir.
Thank you. The next question is from the line of Anurag Janani from Individual Investor. Please go ahead.
Hello.
Namaskar.
Hello. Yeah, namaste. Congratulations. Good set of numbers. I think the recovery has been good. So I just wanted to ask one question with respect to the revenue guidance. I know a lot of earlier participants already asked this question, and you have already given a response. But just to end that particular discussion, currently we are having close to 19 properties and approximately 1,800 keys, right? And in FY 25-26, we plan to add 7 or 8 hotels, which will add further 600 to 650 rooms to our existing set of room inventory. So what I fail to understand is that in FY 25, the company did a revenue of 373 crores, and we are guiding for a revenue of 400 crores in FY 25-26. So that's approximately a growth of 10%. So what I'm trying to understand is that when our inventory levels are going up by approximately 35%, so why is it that we are guiding a revenue increase of only 10%? Is it, are we guiding this revenue estimate on a conservative basis, or are we planning to do a much larger? Are we going to do a much larger revenue than what the management has guided? Because the room inventory is expanding. We are having plans to expand our ARR from 6,500 to 7,200. Right, so there is going to be a 10% increase in the ARR that that the company will be able to realize. Then I'm sure, with the way the economy is growing, there would be a lot of traveling. There would be this travel and hospitality sector is growing. So the occupancy levels, I'm sure, the company would aspire to increase their current occupancy levels from 65% to maybe 70 or maybe 68%. So, considering all these factors, I find the revenue estimate to be a little on the conservative side. So what do you have to say about that?
Thank you, sir. I totally agree with you that revenue is on conservative side for multiple reasons. The first reason is that had Operation Sindoor not happened and the month of May not been not so good, it would have definitely, been a revised estimate, one. Secondly, the number of rooms which are being added are, if you notice, all are being added around September. Right. It means that we're only getting the half-year benefit, and in that also not a full. If I suppose hypothetically I was to open in April, I can take a wedding for the month of November, December. But if I open in September, the chances of me getting a wedding in November, December are limited. I will get FIT business, but I will not necessarily get the kind of wedding business and other things which I was targeting, which I would get if I was opened earlier. That is why next year, based on our current this year's performance, 500 may become much more, sir. It could be this thing today. Right. So I'd rather give my listeners a fair this thing and keep revising it based on what happens. Now, nobody knew this nonsense would happen of this, this tragedy which these idiots did. Very upsetting. But nobody knew that this would happen, and out of the blue it came. And at that time, it is our duty to, support the government and not crib and cry like how some people have done. We have to accept it because our cause was bigger than the situation. So I totally think. But had that not been the case, definitely, sir, then our conservative estimate of 400 would not have been there. So definitely, the company is only out to break the estimate. Also, but if I overestimate, sir, then that is also not fair. So we felt that we just listing it, but it is our endeavor to break this what we have given you target. Okay. I totally understand that. Where is it that this conservative estimate is coming from? But I would
I mean, I as an investor, as well as a fund manager, I would still, I would still ask the management to relook at the estimates, because I think the way we are expanding the inventory and the way we are trying to position our position our brand after the debt restructuring is done. I mean, I feel that the estimate provided by the management is not the reflection of the kind of efforts and the hard work that is going into building this particular Kamat brand. So,
really appreciate you, sir. I really appreciate your genuinely your support, your zeal. I really appreciate, and definitely we will not let you down. If today we have set 400, then we will definitely work towards more than that.
I mean, in the entire Indian hospitality and the tourism sector, I think Kamat hotels, if we keep aside some of the premier and the elite brands like EIH, IHCL, ITC hotels, Chalet. I think the kind of valuations that we as a company have been getting for the past so many years. I think that valuation doesn't justify the kind of brand that we are trying to build. So just as an investor, I thought of just bringing this to your notice so that 400 crores is like even if we would not have expanded the inventory, probably we would have ended up achieving 400 crores. Right? So that,
you are absolutely right, and that's why, sir, we will definitely work to go higher than this, because what you said is
some figure which is reasonably estimate. I know that Kamat Hotels is a very judicious brand, and they are very particular when they communicate anything to the investor. But 400 crores is too conservative a number for the investors to actually feel excited about the developments that are happening in the company. So just on the estimate part, I would want if the management can relook and rework on this particular estimate, considering whatever tragedy and whatever mishap has happened in the last couple of years, which has kind of dented the sentiments that were there in the aviation as well as in the hospitality sector. So just a request from my side.
We will do that, sir. We will review. We will introspect and review, and we will definitely, sir, do the refund. Thank you, sir. Thank you.
Sure. Okay.
Thank you, sir. Namaskar.
Namaskar.
Thank you. A gentle reminder to participants, if you wish to ask a question, you may press star and 1 on your touchtone phone. As there are no further questions from the participants, I now hand over the conference over to management for their closing comments.
Madam, I think there are two questions. One Mr. Amish and one Mr. Neeraj. Neeraj ji just asked a question. Mr. Neeraj Mansinka ji again has a question, and Mr. Amish also.
Okay, sir. The next question is from the line of Amish Kanani from Novise Investment Manager. Please go ahead.
Hi. Thanks for the opportunity. Sir, I just wanted to get an update on the corporate action about, one of the property which we had kind of proposed to merge, and there was some NCLT approval which was awaited. If you can just give us some sense of that corporate action, sir. That will be helpful.
Yeah. Thank you, sir. That's a very good question. I'm glad you asked it so I can appraise everybody also about the same. We have already got the NT and the BSC approval. So now the same has to go to NCLT. So formally a lawyer has been appointed for doing the needful details. And regarding the same, the company will proceed with what process has already been started and will do the same in NCLT. Then for the members' approval also, needful in terms of, updating ourselves and everything. So I think all the things will go off well.
Okay, sir. Okay. Thanks a lot.
Thank you, sir.
The next question is from the line of Neeraj Mansinka from White Pine Investment Management. Please go ahead.
Yeah, thank you for the opportunity again.
Thank you, sir.
Two questions. One related to the participant earlier. On the merger side of the entity earlier, can you share what's the value, approximately range of appreciation of land that will happen for Kamat Hotel? That's one. And secondly, on the Puri side, you had earlier a Puri Beach Fort Mahabali Hotel. I think you had told in the past also. Can you just remind us what is the status of that? Because you're moving to a larger 156 room property later on in 2027. So these two questions.
Thank you, Neeraj. Basically, first let me take up the valuation one. Our valuation of the entity to be merged has shot up drastically because it is very near the Vadhavan port and near the new airport which is coming. So the valuation of our property has shot up drastically. That is very good news that we have for ourselves, and as shareholders also, as this thing also, as a dual interested party. As someone asked me, what if the merger does not happen? I said I'm still happy. What if the merger happens? I'm still happy. Why? Because in both the cases, what I want is basically the value to go up. If the value today, even if the value of my private property has become much, much more, 3 times, 4 times, without going into speculation, even if the valuation has gone up and if it's at the old value, whatever has been done at that value also it comes in, still as a shareholder of Kamat, I am happy. So when people have come and asked us and after understanding and they have gone back satisfied that yes, by this coming in, Kamat Hotels also value goes up and this whole property also which has been valued at a old thing. So I'm quite, so in both cases the promoter is supportive.
Vishal, what was the value earlier when you had done the merger that time? You had assessed the value of the land.
So total value which was there was of 70 crore rupees. For it. One is that it has a 16 odd acres is the land, any land. And also along with that there is property which is of Mumbai which is all about 1/4 of an acre. Na? Kitna hai wo? No, this is about 1/8 of an acre.
Only that 16-acre property would be what valued that time when you had done the merger?
So that time I think its valuation was quite low. Yeah, you can say about around, I think around, नहीं उधर का ट्रियो का नहीं ट्रियो का वैल्यू अलग था, ये सब होलिस्टिक वैल्यू मर्ज था बिकॉज उसमें सब ये है. But basically, in short, whatever the price of that time was, because that was almost a year or back. एक साल हो गया ना उसको. So definitely the value, because like I said, it is right near Palghar, that near the Vadhavan and near the port. And it's a highway touch. Our property is not inside.
You are aware that the prices have gone up by 2-3x. That's right. Just wanted to know how much.
Honestly speaking, I won't know right now, but I would know. I'll find out. Asmita, please लिख लीजिए. Let us also for the thing it. Secondly, also for your Puri point, our Puri property got delayed. Because when we had submitted our plans to the government, our sub-building was a 40-meter tower. But now with the new airport coming at Puri and the Puri airport height restrictions coming in, our plan had to be revised, and now as per law, the height has to come to 27 meters. So the problem is that we have to now change the building. So the number of rooms will still be the same because it's 2.5 acres. So we don't have a shortage in the number of rooms. We don't have a problem in the number of rooms. What we do have is that earlier it would have been a little more efficient building as a tower. Now instead of a tower, it will become a little shorter tower with a bigger base. So the area will go up of construction. But that's basically why the company just, we are sitting with the architect to revise this plan. We want it to be, as Modi ji has pushed in Orissa, the MICE tourism, wedding tourism, and that was his thing. So government of Orissa also is very keen that we develop this 9,500 square foot banquet hall along with these all facilities. So keeping that demand also in mind, which is there, we are basically revising our plans for Puri. So that is why it has got delayed, because of the height restriction rule that has come, aviation rule.
And the 33 rooms, they are still working, or they are just...
Yeah, they are operational. So 24 rooms are operational, 24 rooms. But it is just operational. It is not a area of focus operational. It is just operational because we have the restaurant over there is fully operational, which is doing very well. There is a restaurant over there which is doing very well. So that's basically because our outsiders come and eat over there.
So by the time this property starts, commercial operations, 156 rooms, this 33 rooms will be closed. Is it right? Right assumption?
24 rooms can remain on even while the renovation, while the new building construction is going on, because they are detached. They are not part of the same. They will only shut down they will only shut down for around 3 months when the integration work will happen between both the tower and the heritage wing.
Okay, got it. Great. And this will be as similar for wedding destination and tourism,
Yes,
right?
yes.
That's
Yes,
okay.
sir. Yes, sir. Okay.
And what do you expect on the realization? Last question. What do you expect on the realization on Puri? I know it's quite early stage right now.
Puri also is a very high ADR market. We basically are looking at an ADR of around 10,000 rupees over there. And on an average, Puri as a town, as a temple town, has an occupancy of around anywhere between 60 to 75%. So it's a very good place. Our Lotus Konark is doing exceedingly well. It's only a 32-room eco resort property. Yet its ARR is in the 5,000, I think 5,800. 5,500. 5,500 ka ARR hai, and the occupancy also is at 60%. If this actually we are looking at the addition of rooms over there, which should add more. We're looking at, because that's what will really even further take the occupancy up. So then we can take large conferences. We have a 3,000 square foot hall over there, which is underutilized because we have only 32 rooms. So once we take this up towards the 50, 60 mark, we'll have even more conferences, and the RevPAR and this thing will go up drastically.
Got it. Thank you. Very useful.
Thank you, operator. I think no one else has any other questions, so we can conclude, madam.
Okay. As there are no further questions from the participants, I hand over the conference over to the management for their closing comments.
So I really appreciate, we had a very good turnout of which we've been seeing in the last every call that we have. I appreciate all those who come and listen to us sincerely and patiently, and especially all those who take the trouble to ask us these questions. I really appreciate some who push us, like one of the gentlemen you all heard, who was pushing us to do better, and that's what we're here for. We also require protsa, and we also require that nudge. So thank you. I really appreciate all of you all, and look forward to even better results in the coming quarter. Thank you. Namaskar.
Thank you. On behalf of Kamat Hotels Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
If you found this video helpful, please like, share and subscribe for latest upcoming videos.